This afternoon, Fidelity ETFs is set to ring the closing bell to celebrate the 10th anniversary of the Fidelity Total Bond ETF, which trades on NYSE ARCA with the ticker symbol FBND. Well, joining me now with more, Celso Munoz. He's the portfolio manager at Fidelity Investments. Celso, welcome to the show and congratulations, 10 years.
Well, thank you on that and thanks for having me.
Yeah, it's a lot to celebrate. We'll be looking forward, of course, to the closing bell ceremony here at the exchange at 4 p.m. Eastern. What do we need to know about this fund 10 years in?
Well, we're really excited about it. And FBND, Fidelity Total Bond ETF, is designed to give you broad exposure to the bond market. But importantly, it does it in an actively managed portfolio, which I think adds a lot of value in fixed income. Now, 10 years ago when we launched it, we had Fidelity Total Bond Fund, which was a mutual fund that had a great track record of success and still does, and has a lot of clients that loved it, but we knew that we had clients that wanted the same portfolio experience, but in ETF format. And so we launched FBND, and FBND has all the same resources of Fidelity behind it, the same investment portfolio management team, same process, same philosophy, and it's really garnered a lot. It's really resonated with the market, and it's garnered a lot of assets. We had a lot of growth, and 10 years later, you can see the performance has been very strong. We've outperformed the market by about 1% annualized over the course of the last decade. So it's been a great value proposition.
Why do you think it is something for our viewers, investors, to consider in this particular market environment?
Well, I think it's important to have bonds as a part of a diversified portfolio in almost all market environments. And if you think about what the market looks like today, today yields are relatively high. They're near the highs of the last 20 years. That's really different from what we saw back in 2020. So in the fall of 2020, the yield on the bond market touched 1%. When yields are that low, it's tough for bonds to do what they're supposed to do for you. But at closer to 5%, we're in a position where the bond market can really deliver on what it's supposed to do, which is provide income, provide diversification, and capital generation, and capital preservation. And so we do that with FBND, but on top of that, we're working really hard with our research focus to get you some alpha and some outperformance relative to the market.
Yeah. What else should our viewers know about Fidelity ETFs as it prepares to ring the closing bell today?
Well, let's talk a little bit about how we go about managing fixed income assets. So really our goal is to deliver results that are really strong relative to the market. But when we do that, we want the results to be really consistent and to also be really strong on a risk-adjusted basis. So in terms of consistency, we're not a manager that tries to shoot the lights out every single year. We find that managers that do that end up at the top of the market one year and at the very bottom the next. That's not the experience that you want from your bond portfolio. You want a little bit more ballast there. And so our feeling is that if we hit singles and doubles, over shorter time periods, we'll be in the top half versus the competition. And if we keep that up, we'll naturally be in the top quartile over the longer run, which is exactly what we see in performance. And in terms of strong risk-adjusted returns, well, that focus on research really helps us there.
Yeah. What is your perspective as to what's playing out in the markets now? It has been a choppy stretch, but today we see the S&P 500 up almost 2.5%.
Yeah, it has been, and what that choppiness really highlights is the importance of being diversified within your portfolio. And I think, like I said earlier, bonds I think are well positioned now to do that. And a product like FBND can really deliver on that promise.
What are Fidelity's goals in particular when it comes to servicing its clients, institutional investors, but retail investors too, I'm sure?
Yeah, so we're really working hard to do what's in their best interest. That's what we've always done with all of our funds, and that's no different with FBND. Really putting all of the resources of Fidelity behind it to focus on delivering that good performance experience. One of the big advantages that we have at Fidelity from a fixed income perspective is the equity presence. So every single year, we get thousands of meetings with CEOs and CFOs. They come in to see us because they want to tell their story.
Yeah.
But at each of those meetings, we've got not only the equity analysts in the room, but also the fixed income analysts in the room.
Yeah.
And that's unique. Not every fixed income manager can say that. And so we get a much more balanced picture out of those company meetings. And put yourselves in the shoes of a CFO that's in that meeting. That can be a really uncomfortable meeting where almost certainly that CFO will say something that will upset either the equity analyst or the fixed income analyst. It's very difficult to make both of them happy.
Yeah.
And so we walk out of there with a very balanced picture, and then once the analysts leave the room, They both collaborate and do a lot of great analysis that helps us to add value in the portfolio.
Celso, thank you so much. We will be tuning into the closing bell as we always do. Celso is a portfolio manager of Fidelity Investments. We'll be watching.
Great, thank you.